Hi, this is Joe Shahada. I'm from Top Tier Capital. We've had more of the same in the markets lately. We continue to chug higher and higher in this trend channel that we've been developing since the beginning of the year. And it doesn't look like there's any sign of it slowing down. As long as we're in this trend channel, we just have to assume that it's going to keep going until we break out. But I want to point out a few things about what may happen if we do break out of the channel. We had many instances in the past where we can look at what these channels do when they finally break out. The market becomes very strong in a particular direction. Now, we can correct through time, which is just going sideways, and we eventually just break out of the channel and go sideways. But that's kind of a slow-paced move out of the channel, and you'll know it. But when you see a big, sharp decline out of the channel, that's when you really start to correct. And that's what I want to point out here. Just go back a few months. This is, the end of 2012. We see the same, almost the exact same channel. The slope is nearly the same as well. And here we go. As soon as we pop out of the channel, we crush all the way down, almost to the beginning of the trend itself. Obviously, we went up the next day, but the print was down. It was lower there the day before. So that's what you have to notice, is that it can go down there. And same thing with this broad, kind of long trend here. This is kind of an awkward trend. It's hard to draw. It's not really a perfect trend, but you can kind of visualize the direction. And as soon as we broke out of that direction, I want to call it this time, we saw a big decline. We took out many percent in the market. We had a big correction. I think of this one as more of a correction than anything because it was so long and drawn out. But there are other examples. Here's a very good uptrend. This was, imagine this, the beginning of 2012. Looks a lot like the beginning of 2013 so far, doesn't it? So we had a few attempts to break out below the channel. You could draw this a couple of different ways. You could make it a little tighter up in here, but either way, there's no serious breakout. But when we finally got one, we went way down. And when we went all the way down to the bottom, the whole trend was just erased. And this is the important point to make here. You need to realize that these trends, when they correct from parabolic nature, that they can go way down. I'm not saying we're going to correct anytime soon. You have to get the cues of that first, but just be aware that if a breakout occurs, it can go pretty hard, pretty fast lower. And now my favorite of all of them is this trend from back in the beginning of 2011, end of 2010. This one was really nice. It went straight up and straight up and straight up, and then it just crashed when it was over. It had one attempt to break out, and this is a legitimate breakout. This is a huge fake out, if you ask me. We broke out. The trend was over as far as anyone else would see, but then in one day we were back into that channel, and as soon as we're back into the channel, the trend is on still. Usually this channel is supposed to be resistance on the way up, and it just proved to be non-existent. It turned into support again. However, when we did break out again over here, it did become resistance on the top. So another thing to notice about that is the big decline. Notice that decline from the highs. This is why you shouldn't buy necessarily when you see a trend like this. If you're lucky to get into it, that's great. Imagine if you bought here, but if you're watching this and you're trading this, if you're already in a position, there's nothing telling you to get out, but it's telling you to we're just telling you to be nimble, basically. So let's have a look at the YM, which is Dow futures. We have some similar action here. We have another upward trend channel, and I could go back and look at all those channels from other different periods. They all look the same. There's a big dip afterwards, but what I want to point out is this divergence. We've had this continued upward trend, upward momentum in the Dow, while the RSI, this is down here, this is the RSI indicator, it is trending lower. When we have this going higher and a momentum indicator, or an overbought, oversold indicator, depending on how you're using it, if that's going the opposite direction, that usually signals some downward pressure. And we have the same in the Russell. We have a bigger divergence, actually, in the Russell. This is the RSI. On top, and on bottom is the stochastics. Same deal. We have a continued upward trend with the RSI pointing lower. Usually when this happens, it ends ugly. So it doesn't have to, though. It doesn't always, but most of the time, these divergences are early signals for a decline. but only time will tell what happens. Remember, as long as we're in this trend, the trend is on. So we always trade what we see. When we break out, we break out. But for now, we're in it. This is a chart of oil doing the exact same thing. Since the beginning of the year, it's been in its own upward trend channel. So the reason I'm showing you oil here is because we have to use intermarket analysis. If you're looking at other markets, you can get clues from them. If they're all doing the same thing and one of them breaks out, let's say oil breaks out of its channel because of some sort of, you know, outside force. Maybe it's going to signal to the rest of the market that it's time to go lower too. So if you see these kind of things happening, especially if they're all in correlation, when you see something break that correlation, it can signal other things to do it too. But of course, I want to point out the CCI indicator, which a lot of traders use on oil, is also in a divergence. So that's what I wanted to point out to you guys today. This is Joe Shahado. I'm with TopTierCapital.com, and thank you for watching and happy trading.